back, everyone, to the Crypto Rain channel. I'm your host, Jay Murph, and today we're going to be with Angel Mondragon going over technical analysis. Now, a little bit of backstory. Angel is the one who got me into crypto back in 2017. We met each other through real estate investment, and, I was always looking for good investments, and we were talking, and he's like, well, I just made $150,000 on a small crypto trade. And I was like, what the heck is a crypto trade? And he said, well, like Bitcoin, but it's an altcoin. I didn't even know what altcoins at the time were, but that had my attention. So I had to find out more, and I began researching and digging in, and he explained to me a little bit. But then I jumped on YouTube, and I got a lot of information as far as what was going on and caught up and made some really good buys. But I held all of them way too long because I didn't know what the heck I was doing, and I was new. Even though I had lots of real estate investment experience, I had zero crypto investment experience. So I made a lot of good decisions and then held on too long all the way into the crypto winter. So Angel is frequently out of the country, but he's in country right now. So I wanted to see how often we could get him on a regular basis because his ability to read charts and technical analysis is freaking amazing. Now, he's not new at this, and he didn't start at this with crypto. He's been doing ForEx and other trading and technical analysis for years. In fact, he's trained many of his own employees working for him how to do it and trade successfully and make money. And if we're really lucky, I'll be able to talk him into developing a course. So thank you so much, Angel, for joining us today.
I'm excited to be on here. Thanks again. I'm really excited to talk about all these crypto markets and potentially give others an opportunity to make some money as well. That's the one thing that I really enjoy about doing these videos is giving others an opportunity to not only learn how to read the charts, but if they're following along, make some potential money as well.
Now, he does do charts on TradingView and talks about him, and I've been trying to convince him to start his own YouTube channel, because the data that he gives is so beneficial. Now, he is really deep in the weeds on this and that he's really good at what he does. So often when he's explaining to me, I'm like, okay, let's just backstep it a little bit. And so if we get into that...
So he'll be the moderator for us. If I'm using too many nebulous terms that are too technical, then he'll be able to backstep me and say, hey, explain this a little bit better for you guys.
Yeah, then we'll try to get it translated into English that those of us who haven't been doing technical analysis for years and years and years and years can better understand, because his insight is freaking amazing. And especially as we're trying to figure out how big the run will be this year. Is it going to be a super market or a super bull market, or is it not? And just I wanted his opinion not only on what's going on with Bitcoin, also Ethereum, but some of the other altcoins that we're really interested in. So stay tuned. We're going to break this into multiple parts because we're going to be going through a lot of data today, so I hope you get a chance to check out each of the parts. We're going to cover Bitcoin, Ethereum, RSR, Venus, Swipe, ORN, LINA, FNX, WAN, Reef, UOS, Open, Pols, ADA, ETH, well, I already said ETH, Sky, which is one I put on this list, Wabi, Anchor, and VGX, and maybe even a few more. So stay tuned for all of that, and let's kick it off with some Bitcoin analysis. Take it away, Angel.
Okay, so I'll go to Bitcoin real quick. We're on Ethereum right now.
You can actually just switch on the tab. We still have it open from before, if you want.
Oh, I just deleted it. So do you want me to redo the analysis?
Yeah.
Yeah, okay, so then I'll go back to over here. So, like always, I like to start on the monthly time frame, and this varies for you. My strategy is I like to use higher time frames because I'm a swing trader. It's just recommended that you use a higher time frame anyways, because the higher the time frame means it's going to be a little bit more accurate. So what I wanted to do is switch to the line chart, and this gives you the actual close of the charts themselves, so it's a little bit less confusing because the candle wicks tend to confuse a lot of people. And when we're on these line charts, on these higher time frames, what we're doing is we're looking for critical areas of structure that have been tested several times. And in addition to that, we're also trying to identify potential trends. So obviously we're in a bullish market, so it's to no surprise that we have a bullish trend. So we have a pretty good channel right here as well. And then we switch back over to the sticks, the candles, and clean it up a little bit as well. From here, we could see that historically, whenever we test this ascending trend line, we've had a good healthy retracement, and we're actually nearing that trend line once again. So that could be a potential area where we see some resistance for this particular asset, so for Bitcoin itself. And what we're going to be looking for whenever we're analyzing charts are entry zones and take profit zones. So that's primarily what we're doing. That's the primary focus whenever we're looking at these charts, is looking at areas where we can load up on and areas where we can sell to take our profit. And if you are shorting as well. But for me specifically, what I like to do is use the Fibonacci's as my bread and butter. And next time I come on here, I'm going to rearrange the charts so we can get Jared set up so he knows how to analyze these charts with a little bit cleaner and some really good tools that are simplified and stuff that you guys will be able to look at and follow along with easily as well.
So I'm also going to see if he'll do a video with us of how he sets up TradingView. Because I don't know about you, I know how to use some of the basic tools. I do not know how to customize it to make it simpler. So maybe if we're really lucky, we can talk him into walking us through that if you're interested in learning technical analysis yourself. And if we're really lucky, we can talk him into doing a basic course, maybe an intermediate course, and an advanced course.
So from here, we can see that this 361 fib extension is aligning pretty much dead on with this ascending trend line as well. So for us, we'll just make it a little bit easier for you guys to see. We can identify that this area right here could be a potential take profit zone for us. So when I say take profit in cryptos, I'm just meaning an area for us to evaluate whether or not we want to liquidate our asset, sell it, or if we want to continue holding, and if we're going to see a breakout going further from there. But it's just an area for us to reevaluate. So this area right here is actually aligning with the 95. And as we can see from this historical data, whenever we actually get a close, the wicks themselves tend to be about 40 to 30% higher. So even if we do test it here, we can get a 30% increase, which would be bringing us towards the 120 mark. So we might see a spike up to there. And for me personally, because the 100,000 mark is a round number, it's a psychological number for a lot of institutional investors and a lot of retail investors, we might see just inherently a liquidization zone there as well. So what I mean by that is a zone where people are going to be selling off because it's just hitting a round number. A lot of analysts weren't expecting for it to hit 100K this soon. So for a lot of institutions, they'd be just trying to find a way for them to make some more money as well. So that'd be a potential liquidization zone for us. And if it does do a retracement, using historical data, once again, looking left because the chart always leaves clues, we could see that the previous area of structure that aligns with these fibs is going to be aligning with the 78 fib, and then also this previous structural high, which was between the 15,000 up to the 20,000, so last year's high. So essentially, this is what we're going to be looking for right here. Coming up, hopefully, testing this area right here. If we do end up doing that, we probably would be able to see us testing this price point within the next, why is it not working? We could be seeing it testing this price point within the next couple of months. Let's see how many bars. Technology is great when it works. So 2 to 3 bars, which is about 30 days per bar. So about 2 to 3 months, we could see this price action coming up here, testing it, and then making a retracement down towards this 20,000 mark. And that would actually align pretty well with this descending structure as well. So assuming that it does get treated as resistance, we could be seeing something like that occur within the next couple of months.
So the charts are possibly saying, just to reiterate, that we might hit 100,000, break through that with just a wick, and then possibly retrace all the way to 20,000. So just be aware that that's a possibility that could happen. And just so that you know, if it's heading towards there, you just kind of have a heads up of one of the possibilities that could very much happen. That's very different from what a lot of people are thinking, but that is a possibility that could happen. Just because everyone's thinking it'll happen differently than that doesn't mean it will. And so do you see any other possible support that it might bounce off of if it breaks 100,000 wicks above but then comes back and then breaks down from there? Any other support that might support a retrace to a different number than 20,000?
Yeah, so if we look at the weekly time frame, which is another time frame that I like to use when I'm looking at analysis, we could see that the 40,000 mark is another zone that's halfway through. And if we go back towards the monthly and we take that fib again, we can see if any fibs align with that potential area of support. And we can see that our bread and butter fib, which is the 61 fib, aligns perfectly with that area of structure as well. So that, for me personally, would be a higher probability for us to see a retest as a potential support in the future, assuming we do treat this area as resistance. So I'm not sure why, but let's see, hopefully it works. Yeah. And let's see.
Angel's using my computer.
Yeah, I'm sorry. I'm having to figure everything out on the fly. It doesn't really matter too much. So basically we're seeing this and then coming back down towards this 40K mark, and then from here would be a loading zone for us to come back forward. And then from here we would be looking at potential target zones, assuming that this does get treated as support and we continue with that bullish momentum and this isn't treated as resistance again. We can see price coming up towards this 200K mark, which is what a lot of analysts are expecting by the end of the year as well. So it seems to be coinciding with what a lot of analysts are saying. For me personally, I just like to look at the charts and use what the charts are telling me. That's pretty much it. So
Awesome.
61 fib is with structure. For me, it's looking like a very solid zone for us.
Great. So high potential that if it hits in the 90-something range up to even wicking maybe above, but then coming back and closing the candle of the monthly that was, right? Around the 100,000 mark. And then it might break back down from there. If we're lucky, it only breaks down to 40,000. But it could come all the way down to 20,000. So just be prepared if you're like out there getting a second mortgage on your house and borrowing money that you shouldn't be borrowing. Just know that things like this could happen. This is why they say in crypto trading that you only use money that you can afford to lose, because it can be very profitable. It can be very detrimental if you're using money that you can't afford to lose. As in all of our videos, this isn't financial advice. This is just two guys on the internet, one of us with great technical trading experience for himself and for his organization and business, but he's not giving us advice on what to do ourselves. He's just sharing what he's seeing in the charts for his own decisions. And so don't use this as financial advice. Thanks so much. All right, what are we seeing with Ethereum?
So Ethereum right here, once again, I want to go to the monthly time frame, switch over to the line chart. And what we're going to be doing is just, once again, looking for critical areas of structure relative to where price is at or it could potentially be going. Now, I had looked at this one previously, and I had identified this harmonics pattern, which was just a W pattern. And with these W patterns, we have a high probability of making it to the neckline. But we can see this neckline is really far down, and we have some critical area of structure that's more significant, closer to where price is at. So although these patterns have a high probability of making it to the neckline, we want to take into consideration everything else. So looking at other critical areas of structure so that we're not deluding ourselves and thinking that it's going to go all the way down there. So for me personally, I had said that the 2000 was going to be a zone of resistance because it was a solid number. And for me personally as well, on the daily time frames, I saw that the 1800 mark was going to be an area of resistance in general. I just brought it up to the 2K because it's a round number. A lot of people like round numbers. And for me, I was looking at that being a potential loading zone for us in the future. So the way I was going to set it up was as such.
Do you think it'll blast above this, but then come back to the loading zone, possibly?
So I'll show you what I mean by that. Go to the daily. And another thing that I identified with this was that we also had this wedge pattern. So rising wedges have a high probability of it breaking to the downside. So what that basically means is we have higher highs, but we're losing a lot of that momentum, and that's why we're starting to go a little bit more sideways. And when that occurs, we have usually a high probability of making it to the downside. So I'm personally hoping that we actually do break out so that I can come back down here to the 1200 mark and load up a little bit more. So when I'm looking at cryptos, I'm looking at them as loading zones. So these retracements are pretty much just loading zones for me. And then if we do end up using that as area for us to load up on, and this ends up being a support, then our potential targets would be close towards this 3,000 mark, which is aligning with a lot of what other experts are saying as well. So I just like.
Now, I think we mentioned this before. His chart looks different than yours because he's on logarithmic scale, and so it defaults without logarithmic. And so he usually clicks that on because that gives them, especially on the higher time frames, a better view of what exactly things are going on. And can you show them where the log button is to turn it on and
right
off?
Here.
Okay, perfect. Thank you.
So let's go back. And basically that's all what I would be looking for is because this area is actually already treating us as resistance and we have that pattern, I would be looking at it coming down towards this previous area of support, which was the previous all-time high. And in addition to that, just if it does end up being treated as support, going up towards our TP, our take profit, which is a 127 extension of that previous leg, assuming it does get formed.
So I did want to talk about some pattern that we're noticing. We've been on a massive tear since January 1st, especially in the altcoins. And that's probably not going to always continue, although I've been having a hard time myself identifying where those retracements might be. But whenever you have a 2-month run, it almost always is followed by a pullback. Mm-hmm. And I've been surprised at how strong we've continued to run, but that won't always be the case. And so one of the reasons I wanted to bring Angel on here is to get his ability to read the charts, to give me my best guesses on when those pullbacks may happen. And why not do it on video so that we can share with everyone just kind of what he's thinking about what he's seeing in the charts.
Yeah, and that's another thing to take into consideration when we're doing chart analysis is what we're doing is we're actually just looking at the probabilistic outcomes of these charts. It doesn't necessarily mean we have a magic 8-ball and we know exactly where price is going. We're just taking our previous experience and knowledge of trading and we're applying it to the charts and using that to create a probabilistic outcome that we anticipate where price may potentially go. And for me personally, I do have various mechanisms set in place that prevent me from entering trades prematurely just because I have some sort of feeling that it's going to go a certain way. The markets doesn't necessarily care how you feel. That's why we implement a specific entry conditions each time so that we're not entering prematurely on trades and end up going against ourselves and losing a lot of money. So once again, when we're talking about trading, obviously a lot of people talk about the potential opportunity to make a lot of money. But for me, trading is more focused about wealth preservation rather than wealth generation. So you want to take into consideration proper risk management and entry conditions so that you're not losing your account. And on the other side, you're actually able to make a lot of money.
Fantastic. So I want to add in a few here that weren't on that list, but these are the top 3 ones on everyone's mind right now. The first one being ADA, Cardano. Now, what's funny is you were the first person that ever mentioned Cardano to me. I think it was like late October or November 2017. I was like, I've never heard of it. And I was like, ADA, and I didn't buy it, and I watched it go from like cents up to like $1.20 something. I was like, crap.
So with a lot of these cryptos, and same thing can be applied with like speculative shells for stocks, we don't have a lot of data when it comes to doing chart analysis. So I'll just go down to a lower time frame from there. So for me personally, I'd be going at a monthly. And once again, I like to just go to the line chart and identify potential trends for us. So obviously we're seeing a lot of bullish momentum, and we're just going to be looking at potential areas of support. Now this one's a lot more parabolic than the others, so it's a little different for me personally. So
it has been going absolutely parabolic. And they haven't even like announced a Coinbase listing yet officially. They've given some indications that that's getting close.
So it's actually interesting because if we look at it here, we could see that we're aligning pretty close with our. Oops, hold on one second. With our 368 extension, and that means that this could be a potential area of resistance for us. Now, whenever we're talking about any type of assets without any prehistorical data relative to where price is at, it's a little difficult, so we're going to be using extensions, and extensions are only one piece of the evidence that we like to use. I like to have 3 pieces of evidence when I'm looking at trading, so this is only one. But for me personally, this is lining up with this 361 extension fib, which is telling me that we could be seeing some potential resistance right here. We don't have any other historical data to go off of other than that. So for me, this actually is aligning with that number. And what we would be doing is going to the lower time frames and identifying if there's any type of candle patterns that would be indicating that we would be seeing some sort of reversal. So for example, here we have this nice teaser pop candle followed by 3 consecutive red candles, which would be the black crows, and that would signify that we are looking for some shortings, for some shorts. But then we had this which would be called the rising star, and that is a good indication for us to have some bullish momentum. Now we're back onto this extension, so we might be seeing some sideways resistance similar to what we saw right here a couple of days ago. And if that does get treated as resistance, where would it go next? Well, we do have, as you can see right here, this area of structure. So price action, whenever we're talking about trading, usually moves in like a stair. So what we'd be seeing is something like this. Coming down here, testing that, and then we might see sideways actions like that, or we can come up and then test the previous resistance as support. And that's usually what happens in trading. We kind of staircase up if we look at the charts. So for us right here, we would be looking at a potential loading zone, assuming it does get treated as resistance right here. And where would we want to go next from there? Assuming that does get treated as support and it does give us signs of bullish momentum. Well, we have 2 different options. So we have take profit 1 and take profit 2. And this is going to be the 127 extension, and this is going to be the 361 extension. For me, I usually don't use a 361 extension on my Fibonacci's, only because most of the time price is not moving parabolically like this, but because it's crypto, it's a little bit different. So we're going to be utilizing the 361 a little bit more as an extension for our targets. So this would be TP1. From there, we would reassess whether or not we will want to hold on to it. In other words, whether or not the candles are giving us signs of reversals, or we will want to just hold on to it, move our trade to break even, and then let it go towards our TP2 before we reassess the pair once again. And that would be bringing us towards the 172 mark.
And that's right at $1.73
right now?
No, if it went up from where you just were above that.
So the first take profit would be 135. The second take profit would be 170 to 173.
Got it. Awesome. All right, should we move over to Polkadot, which has been on fire as well?
Which exchange do you think would be better?
All of them are bad because they all start right about the same time, which is fairly recently.
Which one are we on? Kraken?
So yeah. That one's bad because that previous, when it got listed, it just went.
All right, just dropped down.
It gives you something to look at, but yeah. You're going through price discovery right there for sure.
So just to leave that, because we do have something to look for as a reference point, we would leave that up there. But I want to go to the line chart.
Whoever bought it $50 that day,
I felt
totally
sorry for
kicking themselves because they then could have bought 10 times as much with the same amount of money.
That's the worst.
Yes, it is.
So we kind of have a nice little channel. Once again, I'm going to go back to the sticks. It's a little difficult for us when we don't have that much historical data to go off of. But we're still going to make the best of what we have. So what we'll do is we have a little channel kind of growing. So we're looking at a couple different zones for us as a potential support if we do see some sort of retracement. This one right here, which was resistance turned support, and then we have this other one. So once again, remember when I said that kind of price makes a little stair step? That's exactly what happened. Previous resistance usually turns to support and vice versa. Now, where would we want to see ourselves going before we see potential reversal? So right here, we could see that the 361 extension is lining with this 43 mark. We don't necessarily have any historical data to see whether or not that's actually a valid price point for us to look at some reversals. If we were to look at the candles objectively, we can see that we do see price trying to push its way upward, and we are getting some resistance, and that's why we have this teaser pop candle being formed right here. Teaser pop candles are indecisive candles. It doesn't necessarily mean it's going to reverse from there. The indecision in the market just means that there's a little stagnation and obviously indecision. So what we could be seeing within the next couple of days, if we go down to the lower time frames, is this area being treated as resistance and it falling down towards our loading zone, which would be right here. And if it does get treated as resistance, this is where we would be doing. Let's go back to the daily.
So if you were trading this one, your trading strategy likely would be you would kind of watch which way it breaks from here.
Yeah.
If it comes back into the loading zone, then you would be loading up on it.
Assuming the entry conditions are satisfied. And then I would be taking 2 different profit zones. So this one is going to be the 54.70 mark. And that's going to be the 127 extension, assuming that this area, this leg does form. Now, if it does form, that's where my TP1 would be, and then TP2 would be up here at the 76 mark. So 76 pretty much on the dot. And a lot of times these extension zones, these take profit zones or reversal zones, pretty much align with round numbers. Once again, a lot of this, when it comes to trading, is trader psychology. So these round numbers have like some type of psychological significance to people whenever they're trading, and that's why they end up being responsive whenever you're actually trading themselves, because a lot of this is just trader psychology.
Yeah. The only reason charts work at all is because human psychology, people follow patterns.
Yeah, exactly.
And
so that's what I would be doing right here.
People set up their bots to trade based on those patterns too, and so it further makes it true.
Yeah, exactly. Like an echo chamber.
Yes, exactly.
So yeah, that's where I'll be looking at TP1 and TP2.
Awesome. Let's jump over to BNB, which fundamental analysis is what has driven this drive with BNB. And the reason is because they came up with the Binance Smart Chain, which is taking a lot of Ethereum traffic over, for DeFi. And so people are getting so sick of all the fees. And because DOT and ADA aren't functional for DeFi trading yet, a lot of this traffic is moved over to the Binance Smart Chain, which CZ, you're a freaking genius. You really are. You keep innovating, making Binance and Binance's coin continue to be very relevant. Good freaking job.
Let's see if we have some monthly data, which is good. All right, so once again, monthly time frame, line chart, pray and spray, just trying to find critical areas of structure relative to where price is at and where it could potentially be going. Get onto the sticks, throw on some fibs, see if they align with stuff. So we actually already had a breakout. We're still on the monthly candle, so we might be closing below that, or we might close above. So let's go to the weekly real quick. Still parabolic momentum, and right now we can see that we are testing on the daily time frame above this previous all-time high. So let's go back to the monthly. I just want to identify this with a rectangle. Let's go back to the daily. Oops, I want to do just an extension. Yeah, it's pretty much aligning with where it had some reversal. This 361 extension was aligning with that. So once again, just showing you the power behind these extensions. We ended up seeing a reversal from there.
So do you often trade things versus US dollar or versus Bitcoin on the altcoins?
I personally like using the US dollar just because Bitcoin kind of fluctuates in price and it does affect the way, I guess, the analysis works for me personally. It doesn't necessarily make a difference. Whatever you do use, just use it consistently if you're doing TA on it. So it doesn't necessarily matter for me. Just whatever you're using, be consistent. So if this does get treated as support, so we would need to see that on the 4-hour time frames. What we would be looking for is something like this. Hold on. Let's find our target. So TP1 would be right around, what is that, 0083, and then that's where we would reassess, and then from there we would see something towards the 1 cent mark, a little bit above the 1 cent mark.
Now this is on the BTC.
Oh, sorry, this is Bitcoin. Sorry.
I was like, wow, it's way above 1 cent, but it's on Bitcoin.
Yeah, I don't want to confuse you guys. Sorry. So that's pretty much what I would be looking at is just a potential loading zone right here, assuming that this area does get treated as support. So we do have a couple of hours left in this day before we get a confirmation on this candle. Now, if we do get a confirmation on this candle that we're treating it as support, then it's likely going to be a good buy for you. So on the lower time frames would be just all you would need to do is just come down and wait for an optimal entry zone. And then from there, just reassess when it gets towards your take profit zones.
Perfect. Ready for the next one? Let's go into RSR, which many of my viewers really like reserve rights, and some of them have bought really early on. So they've done phenomenal because I think it ICO'd at less than a penny. It's now trading upwards of 50 cents, so they've had incredible returns. And so I want to go over this because I've had a lot of questions on it.
Cool. So once again, line chart, monthly, or higher time frame. This one probably wouldn't be ideal to do monthly. So I'm on the weekly line chart, trying to find some general trends, significant areas of structure. Then throw on the sticks again. And once again, we're going to get this fib extension tool to see whether or not where we're at is actually going to be an extension, or sorry, a reversal zone, and it was. So now we're going to be looking at a potential loading zone for us. That would be right here. So let's get this, and now we're going to do it as a retracement. And we can see nothing. Oops. Sometimes. So we have this 78 aligning with this other critical area of structure. So that's telling me that's two pieces of confluence that this is likely going to be a good support zone, and for us, because we're looking at buying some more buying opportunities, a good loading zone for us. And assuming that does get treated as support, our take profit zones would be up towards the 11 cent mark.
No, this must be versus 11
Tether.
cent.
This is Tether.
They're trading at 50 cents right now.
Is this
Something
RS?
is
I mean,
off.
is it RSR?
Something's off on it.
Tether US.
Yeah. Just pull it up on CoinGecko real quick. RSR. I don't think I'm wrong on that. Yeah, they're 5 cents. I've been totally wrong. Boy, so I was thinking it had gone up to 50 cents already. And it's
Next
only at
time,
5 cents. Yeah. Okay.
So yeah, so
I was
we'll be
hugely wrong on that.
So we would be going up towards our TP1, which would be around the 11 cent mark. And then from there, we would reassess it, assuming that it does continue with momentum upward. Then we would be looking at, hold on, that's wrong. Oh no, what did I do? Oh, why is it not working? All right, well, I guess that's not happening.
Yeah, that's the key to start recording.
Did I mess anything up?
I don't know.
Everything's still functioning.
Yeah.
Okay. So that's pretty much where I would be looking at. One more, just so I could. And that's where we would be looking at before we reassess it. And if it does get continued momentum, then we'd be looking for TP2. But for me, based on this chart, I think that would be a good reversal zone for us before we see some sort of a retracement and corrective retracement, probably back towards this zone right here, which is the 6 cent mark.
Cool. So if it keeps going up, it'll be up close to 11 point or 12 cents.
Yeah, closer to a 12.
And if it might drop back down to the loading zone, which is in the red there, which is a great buy point.
That's at 43.
Got it.
So 4 cents.
4.3 cents. All right, thank you. Let's move on to SXP. Now, I just sold most of my SXP because I want to buy more of some of the other ones. Maybe I made a terrible trade, or maybe I made a good trade. I wanted your technical analysis on this.
I think that's a good trade. So once again, on the higher time frames, we're going to go to the line chart, and just we're going to identify some critical areas of structure to where relative to where price is at.
So it just had a big update and some news, and it pumped further from there, and I thought, I've ridden this pony as far as I want to ride it. It's been very, very good to me. I was able to load up a whole bunch at 70 cents. I had bought some when it early on and made some good returns, and then sold near the top, was able to buy it back when it started retracing and load it up, and then it kept dropping versus Bitcoin, kept dropping versus Bitcoin. When it hit 70 cents, I just couldn't pass up that kind of buy. It was just too good, and I was so familiar with it. I knew it would be a good ride. Well, I thought and hoped it would be a good ride, and it was.
Oops. Okay, so for here, we could actually see that so what we did while he was talking was we got an retracement tool, so fib retracement. And what we're looking at to see if there's any alignment with these fibs and some structure. So I like to use the 61 as my bread and butter, but whatever aligns best is what we're going to be using. And unfortunately, we're not seeing any type of confluence with this particular pair on the structure that we identified. The closest thing that we have, and that's another thing that I want to reiterate to the viewers, is whenever we're looking at trend lines or resistance or support and the Fibonacci's, we're not looking at concrete numbers, we're looking at zones. So it's just like a range of numbers. It's not necessarily a concrete number. So don't get fixated on a particular number, a finite number. We're looking at them as zones, and that's why we like to use this rectangle tool, because it helps us remember that we're looking at zones. It's not a specific number that we're looking at. And this one is closer towards this 61 mark. So the fact that this area right here aligns with the 61 fib and some previous structure is showing us strong signs, in addition to this long wick, that we are having some resistance right here. So where would it go next from there? Now, once again, we want to take a retracement from this leg. And once again, let's go to the line chart, try to identify some relative price. Back to the sticks. Okay, so basically where price could be potentially going, so we do have some good resistance right here, or sorry, support turned resistance, and it could be turning support once again. So that's where we would want to be looking at. It's between the 78 and the 60 fib, so it doesn't have any confluence. However, this 78 fib does align with some previous structure as well. So if we were going to be looking for for some confluence based on the two of them. Once again, I like to have 3 pieces of evidence whenever I'm trading. But I would be waiting for the 78 retracement because it has structure plus the fib. However, this structure alone right here is a little bit more significant because it was already tested twice. Now, whenever we test structure 3 times, it gets confirmed. So what we could be seeing are 2 potential loading zones for us on this one. So basically, this is likely going to get treated as resistance based on the fact that it's aligning with a fib and some significant structure. And this would be potential loading zone number 1, assuming that it does get turned into a loading zone. Another thing I want to remind you guys is risk reward is really important. So if you guys are terrible at trading, but you have good risk reward, you can actually have a losing trading strategy. But if your risk reward is greater than 1 to 2 risk reward ratio, you can still have a winning system, even though your strategy is poor. So that's why it's important to remember about risk to reward is really important. That's why I like this tool, because it shows you automatically what your risk to reward would be. So this one, you would see potential resistance right here because it's a previous all-time high. But our actual target extension, assuming we break past that, would be closer towards... Oh man, it moved the whole thing. Would be closer towards this $4.76 mark.
So if it retraced back to the loading zone, then the risk that it drops from there, there's still a risk that it drops from there, which is the red zone. And so if you were trading this, you would have a stop loss near the bottom of that range in case it did break bad for you.
Yeah.
But if it broke good, it could go up as high as to $4.94.
Yeah.
So
and the thing is, so I do identify this area as a potential area of resistance because it was already tested twice.
So you would take some of your profits there.
I would just identify. So at that point, you would already be at a break-even point. And I like to do this thing where you're moving your stop loss incrementally as well. So at this point, you would actually move your stop loss into a position where it would take profit if it did hit your stop loss. And the reason why I would just be identifying this critical area structure is because it was coinciding closely to those previous all-time highs as far as a candle close. And so we could be just seeing some potential resistance. And that's where trading experience would allow you to determine whether or not we would be treating this as a reversal zone or we would just continue towards our initial take profit, which does align with actually the previous all-time high as well.
Awesome.
So that was a little bit like these.
See why this stuff is so freaking good? Thank you, Angel. I am eating this up. I'm absolutely loving it. And so if you're completely new to technical analysis, I'm trying to help translate it because Angel is very, very smart, and he's been doing this for so long. So he sometimes speaks in words that are a little bit harder to understand. But if I notice that, my job is to bring us back and just translate it, what it means. Now, do remember, this isn't financial advice.
Yeah, no.
What you do and what trades you make is all on you. Okay, the next one I really want to look at is ORN, and I just loaded up some more on this one, something I'm very bullish about their long term, but I want to know what the charts are saying about it. Now, there's not tons of history on this.
So, yeah, probably, let's see. We'll just do this first because there's not a lot of history on it. That's why I like trading cryptos because it's more of a challenge for me as a technical trader. I have to be a little bit more creative, yeah. So for me, I'd already blew past our 61 extension, and the next actual target, and we can see it has a lot of bullish momentum, would actually be up to here, the $13 mark. So based on this momentum, we would likely see some sort of push towards this mark up here. Now, it's difficult to say because, once again, when we're trading things with very little history, historical data, it's really difficult for us. It's kind of a shot in the dark. The only thing that we can do is use a system that you've been working with previously, which for me is these Fibonacci's extensions, and that would give us a relative level of certainty where price could be going. And at this point, we would just be looking, once again, whether or not it'd be giving us signs of resistance.
So you would look at it, hitting $13, and then you would be evaluating what to do from there.
Yeah.
And we don't have a lot of history to go. We don't know this can continue to $13. That's just a guess that it might, and then evaluate it because there isn't any previous structure. It's still so early. It's still in some price discovery, really, even though it's been tradable since October.
Yeah, so that's pretty much it. And you can see it already broke past, which historically for me is my bread and butter is the 127 as my take profit. Once again, because we're in an extremely bullish market, I like to use the 361 extensions. So yeah, it's already blew past that. So that means it's likely going to continue with that momentum towards this 360 mark.
Because looking at the chart, I see when it came out on the markets, there was a lot of price discovery and people that had bought pre-sale and stuff that dumped their tokens, brought the price all the way down. It then retraced. It went all the way back up to where it started. Then bounced off of that resistance, went down from there and formed a nice little W. I call them W's. Angel knows that and uses the more technical name for it. But then it's absolutely been mooning since then. Now they've had a lot of good news and a lot of partnerships and their solutions to some of the problems we're facing as traders of having one portal to be able to access all the DEXs, all the centralized exchanges. Really great idea. If they deliver on that, very excited. And they did just partner with DuckDAO, woo, which is one of the best launch pads in my opinion. They incubate some of the best projects. And so they're going to be working on streamlining DuckDAO's system to make it easier for the pre-sale investors as well as make it easier for when it comes out on the market not to get... So a lot of these things get released on ORN's exchange rather than, say, a pairing on Uniswap, which then scammers create a fake pairing and people lose their money. So their solutions are really needed, actually. Very excited about that idea.
So for me, I just identified, once again, this was a previous area of structure that was resistant twice. And once again, structure tends to move either from resistance to support and vice versa. This area of structure actually aligns with his 78 retracement as well. So if we do see a touch up here, assuming that this area does become a reversal zone for us, and we do see some sort of retracement, based on the weekly time frame, we can see a potential retracement or a loading zone for you guys all the way down towards this $4 mark. So that's why it's important to understand take profit zones, especially since this is a take profit from a bull cycle. And if we know anything from previous, we want to take profit at the peaks of these bull cycles to get a lot of money so that whenever these bear cycles come into play, we just have more money to come in with to load up on. So that would be a potential loading zone for us based on this chart. Once again, very little historical data, so it's a little bit more challenging for us to determine with high level of certainty.
All right. Now, did we cover Cardano yet?
Yeah.
We did. And so .BNB. All right, so let's move on to LINA. This is another one. LINA. And there will be two that come up. You're looking for linear token versus... Linear finance, actually. Probably that one on Wobby.
So this one has very little data.
Yep, that's probably the most data there is, too. And so all we can do is look at the daily.
So we're going to look at the daily. And right here, we can just identify this trend. And once again, I like to just throw it on the line chart to help prevent any kind of confusion. We can see that the more times that price touches an area of structure, so whether it's a resistance, support, or a trend line, the higher probability it's going to be respected in the future. So we've already tested it 1, 2, 3, 4, 5, kind of going sideways a little bit. So it's already confirmed as a trend line for us. And if you see right here, we're actually testing it once again. So if we do continue to test it as support, then we can see a bounce from here. So before we do that, I kind of want to identify some other areas of structure real quick, and we go back to the sticks. So where would we want to go from here, assuming that this area does get treated as support? So we already have a double bottom. We can see price coming down here, tested it, and it came back up, and now we're testing it here again. So that's a double bottom, and this double bottom is coinciding with previous structure and this trend line. So that's already 3 pieces of confluence for us. So 3 pieces of evidence on why we would be able to trade this with a high level of certainty. And where would we want to go next from here, assuming that it does get treated as support, i.e. your entry conditions are satisfied? We have several different take profit points for us. And right here.
Oh, that's freaking exciting.
So a little bit more realistic because this one isn't necessarily as parabolic as the other ones that we've been identifying.
Yeah, it's a lot more linear.
Yeah.
Funny enough.
So right here, let's see. And look at this risk reward ratio, guys. It's a very safe stop loss as well. So it's giving us a lot of room to breathe. It's going past below this other previous area of structure, but it's still giving us a 1 to nearly 6 risk reward ratio, which is really good. So that's pretty much where we would be looking at going potentially before we start reevaluating. And from there, once again, you would be at a take profit, or your stop loss would be at a break-even point. And if you're following a specific strategy, then your stop loss would be at take profit essentially. But we'd be looking at going towards this 17-cent mark essentially as our take profit one.
Awesome.
So 3 pieces of evidence. That's a good one. This is actually a good setup.
This is, I know, I love it. And I just bought some right at these prices. I had bought some a little bit above as it had retraced, but I bought some more. Guys, this is part 1. We will be continuing with part 2 and part 3. Some of the things that we will be covering up is FNX, WanChain, Reef, UOS, Open, Polls, which is Polka Starter, and then we will later cover Sky, Wabi, Anchor, VGX, and maybe even some others. So stay tuned for those. All right, guys, we're going to take a break.
All right, see you.